level. Hi, good morning. Thank you for taking out Saturday morning for me. I do not know whether PMLA really interests you all or not, but I'm sure it concerns you all if it doesn't interest you all. So one way or the other, I have you all with me for an hour and a half. And I'm going to try and make this as helpful as possible. Also try to resolve as many issues as I can. I'll just give a brief background beyond the formal introduction. Everyone in this room, perhaps with the exceptions of my colleagues, is more qualified than me, okay? Because you all are chartered accountants. I never gave my CA final, so it is a specific proud moment for me to address you all today, and being called as faculty. But the CA Institute, being the CA Institute, decided that this much challenge isn't enough. So they said, Aditya, why are you speaking on PMLA? You keep speaking on PMLA. Let's talk about the interplay between PMLA, black money, and income tax. So, yeah, it's okay. Thank you. So then, of course, right before the exam, my portion changed, and I'm here before you all today to discuss not just PMLA, but also certain aspects of the Black Money Act and the interplay with Income Tax Act. PMLA is a subject that we really cannot cover in a short span of 1.5 hours, but the interplay is something that we can. In order for me to help you all understand the interplay, I will have to give you all a brief background on PMLA, a brief background on Black Money Act, and well, I can't give you all much of a background on the Income Tax Act. I'm sure all of you all already know it. But we will examine some interesting interplays that happen, right? I'll introduce my colleagues. Mr. Pulkit Tyagi is there. This is Rupal Shrimal. We usually, even for these lectures, come as a team for 2-3 specific reasons. Firstly, we also gauge what is it that CAs require in every sort of interaction that we have with them. So now we've been doing this for around 15 odd sessions. So we every time customize our slides based on usually what are the important questions that come up perhaps during the last lecture. I also encourage a lot of interaction so that this can be tailor-made to you all. Now with that, let me start out. How many people in the audience know anything about PMLA or have some exposure to it? I see 1 hand, 2 hand, 3. It'll have to be higher. I'm the only one who can't raise my hands completely, right? So I can see 2-3 hands. Black Money Act, right? So now we know whose clients have received notices. But as the overlap seems very limited, so let me give you all a brief idea about my understanding of PMLA. It could be very different from your understanding of PMLA, very different from the ED's understanding of PMLA, and very different from the court's understanding of PMLA. Mainly because though this act was so old, we saw it getting invoked fairly recently. I think, it enveloped our conscience very recently. When we saw that the enforcement was getting stricter, we saw that our clients were getting notices, and in certain cases, our colleagues were getting notices. And that worried us a bit, right? How many people here are worried about the effect PMLA could have on their practice? Just one person, very confident lot, I must say. Because by the end of this, you all probably will have to go back and assess everything about your practice, including what you all do during audits, what you all do while tax planning, what you all usually do while suggesting structures, everything. Because of this weird definition of money laundering and proceeds of crime. Can we get to the definitions, please? Before this? Yeah. Now, the offense of money laundering, okay, is very broadly defined. It says, whosoever directly or indirectly attempts to indulge or knowingly assists or knowingly is a party or is actually involved in any process or activity connected with the proceeds of crime, including its concealment, possession, acquisition, or use, and projecting or claiming it as untainted property shall be guilty of the offense of money laundering. Can anyone tell me what is excluded in this? Does anyone have any views on this definition? No one? Extremely wide. Which is why I didn't ask what was covered. I said what is excluded. Directly, indirectly, indulge, knowingly assist, knowingly is a party, or is actually involved. See, the using or is actually involved means even if you are not actually involved but you fall within the first two, you will still be covered. In any process or activity connected with proceeds of crime, including concealment, possession, acquisition, or use, and projecting or claiming it as untainted property, shall be guilty of the offense of money laundering. I believe 3 to 4 people put their hands up when they said that they have some exposure to PMLA. I need to ask, did anyone else out here who didn't put their hands up, have they ever read this definition? It worried me. Does it worry you? Because there is an explanation, right? And the explanation says pretty much what the section 3 says. It says, for the removal of doubts, it is hereby clarified. I do not see the clarification. That a person shall be guilty of offense of money laundering if such a person is found to have directly or indirectly attempted to indulge, or knowingly assisted, or knowingly is a party, or is actually involved in one or more of the following processes or activities connected with the proceeds of crime, namely concealment, possession, acquisition or use, or projecting as untainted property, or claiming as untainted property in any manner whatsoever. So what is the difference? We read section 3, we had doubts, right? I had doubts. I'm sure you all had doubts. Then I read what was supposed to clear those doubts. Personally, I still have those doubts. Any feedback? What do you all think is excluded? I take a great pleasure in doing this to CAs. No answer? Yes, please. Only proceeds of crime will come under PMLA. And the word knowingly, right? So knowledge is very, very, very important. If you do something without knowledge, then you will not be guilty of the offense of money laundering. Please do not consider that as you all being off the hook. There are other repercussions that follow, but you will not be guilty of the offense of money laundering. This is very interesting because when we started out, a lot of CAs asked me, Aditya, yaar, limitation to hoga na? I mean, कुछ तो होगा. 20 साल पहले का थोड़ी निकालेंगे, 30 साल पहले का, 50 साल पहले का, 5 साल पहले का. What is the limitation? And this explains it. The process or activity connected with proceeds of crime is a continuing activity and continues till such a time a person is directly or indirectly enjoying the proceeds of crime by its concealment or possession or acquisition or use or projecting it as untainted property or claiming it as untainted property in any manner whatsoever. No limitation. Right? So now what we have is a section that says everything connected to proceeds of crime, as long as you have knowledge about it, would be the offense of money laundering, and we said that there's no limitation. I call this a waterfall mechanism because we as lawyers love to use fancy, like twin tests, then waterfall mechanism. I think these buzzwords really make us feel, fairly able to connect with you all. So I have a waterfall mechanism for PMLA, right? The first is obviously section 3. Then we move on to proceeds of crime. Because as it was correctly pointed out there, what is most important is proceeds of crime. So though this is a different section, this comes under the definition section, section 2U. For me, it is essentially a part of section 3 because I cannot make sense of section 3 without reading section 2U. Section 2U defines proceeds of crime, okay? It means any property derived or obtained directly or indirectly by any person as a result of criminal activity relating to a scheduled offense, or the value of any such property, or where such property is taken or held outside the country than the property equivalent in value held within the country or abroad. And then of course they put an explanation that says, for the removal of doubts, it is hereby clarified that proceeds of crime include property not only derived or obtained from the scheduled offense, but also any property which may be directly or indirectly be derived or obtained as a result of criminal activity relatable to the scheduled offense. And the last, you all see the last bullet point? I put that as an Easter egg because, Saturday mornings can be very slow. And I need you all to be with me for the entire 1.5 hours. So I'm not going to give you all the answer right now. But have you all thought of the question? Suppose I am accused of money laundering and I have paid you certain professional fees. I'm a very big businessman, so I give one person, I get them to issue me a remittance certificate. Another one issues me a valuation report. Third person conducts internal audit for me. Fourth person does a statutory audit for me. And I have paid everyone a lot of fees. You all were very happy when I was paying more than market value. Would it change if I paid market value? Would it change if I was cheap and I paid below market value? There is no clear-cut answer right now. We will help you all devise answers to yourself because, we are very used to having risk management strategies. The income tax department keeps saying it. We are formulating a risk management strategy. We end up doing that for our clients, but I think it's time we start doing it for our own practices. Because at the end of it, there is, this story on Saturday morning ends with a moral. And I will be giving that moral to you all right in the end. But proceeds of crime is not where the waterfall mechanism ends. Proceeds of crime also leads you to something else. Can anyone identify that for me, please? Perfect. Scheduled offense. Please, ma'am. There is a schedule to the PMLA. That schedule is full of acts, right? And sections. And it runs into multiple pages. Those are the only offenses that can trigger an offense under the PMLA. The reason why they are the only offenses that can trigger an offense under the PMLA is because of this waterfall that I just explained to you all. Please don't use waterfall outside. People may not understand it. It's just something that I've formulated because for me it's a step down, right? If I cannot understand the definition by itself, I need to read it with another section and a third one. So for me, as a definition, it's a waterfall, right? Scheduled offense is the most important thing. Till now, most of the changes that have happened to PMLA, as we understand it, because of the interpretations of the courts, have been because the existence of a scheduled offense has been considered as one of the most important factors for PMLA proceedings to continue. Earlier, what was said was that a scheduled offense, an FIR is filed, and then the ED comes in and investigates. They said money laundering and the scheduled offense are distinct offenses, and therefore can exist independently. That was a judicial view that was taken earlier. The Supreme Court has settled it. Supreme Court in Vijay Madan Lal Chaudhary, which is a very, very famous judgment. It is a treatise on PMLA. If anyone's actually interested in understanding how PMLA functions, it makes for a great read, though a fairly lengthy one, because it is very thorough. You cannot have proceedings under PMLA without a scheduled offense. It doesn't matter whether it's prosecution, confiscation, it doesn't matter whether it is a provisional attachment. The only PMLA proceedings that can continue without this is proceedings against you for not complying. Because as you all probably know, the news is almost 2 years old. There are compliance requirements that are put not only on chartered accountants, company secretaries, cost work accountants, but also on banks. Real estate agents are also getting, some of you all might have clients who are real estate agents, even they must have got, notices asking them to register on the FinNet portal, right? The compliance requirements do not need a schedule offense because there is a P in the MLA. The P stands for prevention. The object of the act is not only punishment, it is for prevention. And they cannot do it without credible intelligence. There are two agencies that actually deal with matters under PMLA. One is the FIUIND, which is an intelligence gathering agency, and the second one is the Enforcement Directorate. The FIUIND is the one who gets all the financial information that you all feed into the system in compliance, right? Please go ahead. We'll get back to PMLA, but at this point of time, I need to introduce you all to the Black Money Act. Can we go to the Black Money Act slide, please? Yeah. Do you all know what strikes me in the Black Money Act? Has anyone read the Black Money Act? No one? You have, sir? You have? Tell me where black money is defined. Nowhere. That is why calling it a Black Money Act is just a shortcut. It is actually the Black Money brackets Undisclosed Foreign Income and Assets and Imposition of Tax Act 2015. Okay? So if I were to just cover up black money and read it as the Undisclosed Foreign Income and Assets and Imposition of Tax Act 2015, the meaning of the act, the object and the purpose of the act would not change even a teeny tiny little bit, right? Which is great news because it just basically means it's an extension of the Income Tax Act. Because it is a direct tax, it has been specifically enacted for a specific purpose, that is to tax undisclosed foreign assets and incomes, which is fair enough. But then when I read this for the first time, I had a question. Why could they just not do it in the Income Tax Act? I mean, if there is an undisclosed foreign asset or income, could they not tax it in the assessment, regular assessment? So we've got a lot of CAs and I'm sure a lot of you all practice tax. So please do tell me. During regular assessment, can the assessing officer not assess my undisclosed foreign income and asset if it comes to his attention?
Maybe prosecution and something, criminal proceedings.
Ma'am, we are going ahead. Specific query. During assessment, can the assessing officer, if a foreign asset undisclosed comes to his attention, can he or she not assess me? Or if some information comes subsequently, can they not issue me a 148? Because 148, yes sir.
This foreign assets, a separate department is there, it will be done by some other officer.
No, I am saying even if this act wasn't there, can the assessing officer under the provisions of the Income Tax Act not assess my that year's income? Yeah. Yes. No, sir, I am saying suppose the Black Money Act does not exist. We are trying to figure out, the first thing is, finding out the purpose. If we need to understand the interplay, we need to understand what is the point of this specific legislation, right?
We can't do anything else. The disclosure requirement is that anyway is going to disclose later.
No. suppose I'm an assessing officer, all right, and I am scrutinizing, well, not yours, but my colleagues' income tax returns, and some credible information comes to me. I see some entry in her bank account that says, that says Swiss bank account, $20,000 transferred. Scrutiny assessment is going on. I can raise a specific question. Where does this $20,000 come from? Yes? Pardon me, sir? Yes. Correct. Correct. Yes. Perfect. Yes? I'm really enjoying this, but I will have to now put a stop because I am on a clock today. What can be assessed under the Income Tax Act for a particular assessment year is the income of that year. If I have an undisclosed asset from a previous year, then how does the assessing officer tax it in this year? No, income from that asset is fine. But this act does not only tax the income from that asset. This act taxes the asset itself, which the Income Tax Act doesn't allow you to do, because Income Tax Act says that we will tax the income of this year. If there is no income in this year, if I can show that the amounts in my Swiss bank account, I do not have one. I believe this will go on YouTube, but my made up Swiss bank account is of a previous year, then nothing really can be taxed in this year except, pardon me, sir? Yes. For this year. No. I am saying very specifically, there is a Swiss bank account, there can be a real estate, there can be anything that is put up, but I have to bring it down to that assessment year. Sir, but you are going into reopening. I am talking about assessment itself right now. And the reopening amendment is also subsequent to the act. So I am talking about a resident. Because this act also applies to residents. It does not apply to non-residents. If I am not a tax resident in India for a particular assessment year, this does not apply. Because that would mean my global income is not liable to tax in India any which way. Though even with respect to NORs, there are other, as usual, there are caveats, these many, the last assessment year, you should be here, you shouldn't be here, etc. All those things are there, just like we have in the Income Tax Act. But the purpose is that if I am a resident, tax resident in India, and I have undisclosed foreign asset or foreign income, I have to disclose it. And when the act came out, they gave me a window to disclose that. I hope all the audience here know it, right? So that gave you a certain amount of immunity and privilege for that period of time. It was like Vivad Se Vishwas, sort of an IDS that was already put in the act itself, right? The act provided for it. So it said, you disclose, this is the rate of tax, this is the penalty, and we'll finish it off and nothing's going to happen. But once that is over, we will not spare you. Can we go to the definition, please? Yeah. Yeah. Section 2 defines assessee. It says an assessee means a person, as we said, being a resident in India within the meaning of Section 6 of the Income Tax Act. So again, we've already started discussing Interplay, my friends, because Income Tax Act is mentioned. So I am not going off portion, right? Being a resident in India within the meaning of Section 6 of the Income Tax Act 1961 in the previous year, or being a non-resident or not ordinary resident in India within the meaning of Clause 6 of Section 6 of Income Tax Act in the previous year, who was resident in India either in the previous year to which income referred to in Section 4 relates, or in the previous year in which undisclosed asset located outside India was acquired. So again, everything comes down to residential status, right? Provided that the previous year in case of acquisition of undisclosed asset outside India shall be determined without giving effect of provisions of clause C of section 72. We'll get to section 72 if we have the time, but please do read this up because can we move on? I want to move on to the charging section also. But let me just take you all quickly through the sections before we discuss this, right? There shall be charged on every assessee for every assessment year commencing on or after the first day of April 2016, subject to the provisions of this Act, a tax in respect of his total undisclosed foreign income and asset of the previous year at the rate of 30% of such undisclosed income and asset, provided that an undisclosed asset located outside India shall be charged to tax on its value in the previous year in which such asset comes to notice of the assessing officer. That means if I have a house that I have purchased in the UK 25 years back, if it comes to the assessing officer's notice now, so it will be charged to tax on its value in the previous year in which it comes to the notice of the assessing officer, right? And value of undisclosed asset means the fair market value, including financial interest in any entity, determined in such a manner as may be prescribed. Can we go before this? We had few more definitions. Yes, 211 is extremely important. It means an asset including financial interest in any entity located outside India held by an assessee in his name or in respect of which he is a beneficial owner, and he has no explanation about the source of investment in such asset, or the explanation given by him is in the opinion of the assessing officer unsatisfactory. An undisclosed foreign income and asset means the total amount of undisclosed income of an assessee from a source located outside India and the value of undisclosed asset located outside India referred to in section 4, right? 211 is very important because it doesn't only refer to an asset that is held by a person but also beneficial ownership, right? And this is going to be critical because a lot of times husbands and wives have joint bank accounts. Primary holder may be the husband or the wife, and the spouse may not disclose it in their FA schedule, saying that this is not my asset. My name has just been put in. It could be a house which is purchased on a joint name. There are issues with regards to penalty for non-disclosure that come out of this, even if there may be an explanation for the source, and which is why perhaps it will not be taxed. But non-disclosure also has a stiff penalty of around 10 lakhs.
But in this case, if the husband has already disclosed it in the FA,
But you have not. My husband has disclosed it in his return. The penalty provision requires you to disclose undisclosed assets in your return. Your assessing officer may be different. It's also not, I don't know whether it's department practice to actually sit down and compare the two returns. I'm not making a joke here. I'm sorry, I'm not mocking, but I'm just saying the problem that happens is anyone can get away by just doing that, Nathan.
But there is also beneficial owner there.
Yes.
The wife may not be the beneficial owner.
Yes, but how will you prove you're not the beneficial owner if you're the second name in the joint bank account? That may be the case, but what happens? Are you allowed to operate the account? So we'll discuss bank first and then house. It will be subjective. You will have to satisfy the officer, and the most important aspect about it is it's better to just put it in your FA schedule, right? I mean, this entire conversation is fairly academic because I have had over the last few months a lot of heated debates with chartered accountants. I am not heated, I am very relaxed. The chartered accountants like, but this has been disclosed. I'm like, yes, you've disclosed it in your return. You have annexed your balance sheet. Have you put it in your FA schedule? And then the CA says, I have disclosed it in the husband's hand because it is the husband's money. He has put it in. Wife's name is for, what do we keep using it in income tax? Administrative convenience, as if that is actually a word. See, I believe administrative convenience is a made-up word. You either have interest in it, if you are a joint holder, there is a certain right that you have to operate the account. Or if you're a joint holder in the house also, there will be a certain share. How many times have we seen assessing officers make assessments and split the capital gains into two different hands, right? Based on the joint ownership. So, ma'am, I hope that answers, yeah. Right? So, you have to disclose. And this is going to be a recurrent theme even when we jump back to PMLA. You have to disclose, right? Now, the reason why I have taken you through PMLA first and then Black Money Act second is because honestly, I don't have much to talk on our main topic today. What is the interplay between the Black Money Act, the Income Tax Act and the PMLA? Between the PMLA and Income Tax Act? If you go by face value, no interplay at all. Mainly because PMLA does not apply to all offenses. It applies only to? Perfect. Congratulations, Income Tax Act is not scheduled. Right? Also remember how like a year, 2 years back, a newspaper article came with saying that GST is under PMLA. GST is not in the schedule either. GST was made a part of the intelligence gathering apparatus by which intelligence is shared. It's not put in the schedule. Right? So, someone actually came to me for an opinion because a fairly important person, there was tax prosecution lodged against them. Also, by the way, this is deja vu because I studied AML, that's anti-money laundering, in 2012, and one of the questions that our professors asked us during our LLM was like, can money laundering be initiated for tax evasion? Based on what we have discussed in the last half an hour, what can you all tell me? Can money laundering be invoked for tax evasion? Yes? No? Right. If it is not in the schedule. Would you be surprised if it was sought to be invoked? Yes, yes. I also said your answer is correct. I am also asking you whether you would be surprised if such a proposition was actually tested in front of courts. Because that means someone has tried to invoke it, right? If a matter goes into litigation, that means किसी ने तो वो interpretation निकाला है. It may be right or wrong. And well, the fact remains that there is an IPC section called 120B. Okay? 120B is scheduled. What does 120B entail? Common intention of criminal conspiracy. Do you have the slide for it? Please. 120B said that if you enter into a common intention conspiracy, I'll just add both the answers together, right? Pavna Dibur. Yes, please. Aram sir. 120B said that if you and I get into a criminal conspiracy together, then it is a scheduled offense. So if you and I stand here and discuss the best way our clients can evade income tax, we can perhaps be prosecuted under the Income Tax Act. But then because we are multiple people, 120B can be reined in, and 120B is scheduled. Luckily for us, Supreme Court said, wait a minute. They said 120B cannot be read. Can you just show me 120B? Yeah, but just show me 120B also, please. Yeah. Supreme Court said that you can't read 120B in isolation. You see the other sections also that have been come in. Otherwise, this is a backdoor entry, which is the right interpretation of it. But for a brief moment out there, before this judgment came, my heart had stopped. Because it made sense. I actually wrote an article for AFTP before this judgment saying that, you know what, 120B is scheduled and there is a possible interpretation that PMLA can be invoked even in tax prosecutions. Then this judgment came out and I wrote another article saying the opposite thing. Academia. Yeah. 120B reads, punishment of criminal conspiracy. So if you enter into a criminal conspiracy, it is possible that you can be triggering of PMLA proceedings. PMLA proceedings are not only about the offense of money laundering, it is also about tracing the proceeds of crime and attaching and confiscating them, right? This is where a lot of questions come in. Usually when a notice comes to, when a CA calls me up and he says, Aditya bhai, notice aa gaya hai. I'm like, section 50 ka? He's like, arey, aapko kaise pata? That section 50 is the notice that they usually send to collect information. Section 50 is the section which is invoked, right? This can go to CAs. This can go to a lot of people, pretty much everyone. In fact, how many people know that a senior advocate was recently, 2 senior advocates were recently issued these notices, summons. They were under section 50. It was with respect to an opinion that had been given by those senior advocates before. And then those, after a lot of to and fro, those the summons were withdrawn. And a notification came, the ED came out with a list saying that you have to satisfy this, and take permission from this person if you actually want to do this because of section 126 of the Indian Evidence Act as it stood. But let me assure you that as a chartered accountant, there is a very, very good chance that you are at least called upon to deliver your audit files. Because the audit file that you all maintain, that you all are supposed to maintain, is pretty much a panchnama of the entire year. Right? I'll tell you how typically the biggest issues in PMLA come in. Let us forget what we call Prevention of Corruption Act right now. Okay, though ED came into our radar because of the high profile arrests that came in. Typically, a lot of the PMLA matters happen because of siphoning of funds. The ones that should concern us the most are those of siphoning off of funds by promoters or individuals higher up in the management, top management of any company that we may be advising, that we may be even auditing. Now, how do these funds get siphoned off? Creative ways. We know that there is no shortage of human ingenuity when it actually comes to this. But usually this money is public money. Now what happens when we say public money? Public money doesn't mean money that comes in through an IPO. Public money probably could mean a loan from a bank, a facility, working capital facility. Any sort of money that is borrowed, and this money is typically borrowed based on your financials. And who is the person certifying the financials? Typically, if a remittance has to be sent abroad, who is the one giving the certificate? Even if sometimes valuations being required to be done, who's doing it? All these documents can be used to raise funds. If those funds are subsequently diverted, then what? can we go back to the definition of proceeds of crime? You can just take a chair and sit. No problem. Okay. Sorry, not proceeds of crime. Section 3. Wow, a lot of water flowed under the bridge since we came to this slide. So now, with the questions I've posed to you, can we read section 3 again? Whosoever directly or indirectly attempts to indulge. We didn't attempt to indulge, we just audited. Knowingly assists or knowingly is a party or is actually involved in any process or activity connected with the proceeds of crime, including its concealment, possession, acquisition, or use, and projecting or claiming it as untainted property, shall be guilty of the offense of money laundering. Do we see the red flag here when it comes to us as professionals? Yeah. And this is the part where usually someone would come and say that I have a silver bullet. The good news is I do have a silver bullet. The bad news is not all the people like the medicines that they are given. Traditionally, what has happened, because I come from a CA family, so I understand how the background works, right? You often have multi-generational practices, multi-generational clients or clients who have grown with you maybe over 10 years, 12 years, 15 years, right? You have a relationship with your client. And typically when you need to do something for them, a lot of it is just like, kar lo na, ho jayega, kuch nahi, kuch problem nahi hai, everything's fine. You know me, you trust me. I'm sorry. The only answer you can give to that client is, I'm sorry. We do not know what that client does with our audit report. I have now devised a beautiful mantra whenever I talk to any CA about this topic. When in doubt, qualify. No one wants to hear this. Because that one qualification might cost you the client, right? Yeah, but not qualifying would cost you perhaps a lot more. When in doubt, qualify. When in doubt, refuse. And I am saying this because there is a standard of care that is required to be done by every chartered accountant in his or her practice that is independent and over and above what the accounting standards say, what your checklist says, your audit checklist says, what your SOP says, whatever that comes in. It doesn't matter whether you are an employee, whether you're a partner signing a balance sheet or an article. If there is something that needs to be flagged, you as an auditor have a responsibility to flag it. If you did not flag it till now, perhaps the repercussions, we don't know what they could have been because no one really looked at it that seriously. But we do not know whether our client, what he's using those financial statements for. What is he using them for? What if there's not enough stock? What if that is not the actual revenue? What if the sales are inflated? What if they're deflated? If they're deflated, fine, he won't get more money. I mean, that doesn't mean you don't qualify it. But I'm saying sales being inflated is typically what happens, right? When cash flow gets tight because you need to infuse cash. How do you get that cash? You get a better facility. You ask for enhancement of limit. You ask for a loan. That is how you solve cash problems typically. What do you need for those facilities? Statements prepared by? And if you all knew and did not qualify, please read section 3. Please read this. Please read this. And please read this. Please read this. So one may think that I mocked the definition in the starting. I didn't. It was meant to actually cover everything. And don't say they didn't warn you. They pretty much repeated it नीचे. देखो, अगर doubt है तो हम वापस बताते हैं आपको. Right? I mean, technically speaking, this is not much of an interplay with the Income Tax Act, but I mean, you all get the drift. This is an interplay with your practice as a whole, right? Yeah, we have time. I hope no one's getting bored. Like, do we continue on this tone or do we go through the slides? You're liking this better? Anyone can just ask a question and we'll, shift in and out as required. I think Black Money Act might feel a bit left out, so we'll go back to Black Money Act. Black Money Act has a direct interplay with PMLA. You know what that means? It means there is a specific section in the Black Money Act which is in the schedule of offences under the PMLA. Can we have that section, please? What is that? 60,000. It basically says whosoever seeks to evade tax. Willful attempt to evade tax under the Black Money Act is scheduled under the PMLA. You know, the beauty of the Black Money Act is that it is very easy for most chartered accountants to understand because the wording is very similar to the Income Tax Act, right? 276C2, 276C1 is very similar to it. If you actually look up the Income Tax Act, there was like this spurt of prosecutions that happened after 2016. I'm sure a lot of people had clients that got these notices, and people started taking these sections a lot more seriously after that. But the wordings are very, very similar. Willful attempt to evade tax is scheduled under the PMLA. So that explains the interplay with Black Money and PMLA. The good thing is most of the proceedings under the Black Money Act right now, most of them, I'm saying like majority because a lot of them are routine, right? If some information comes to them, is basically for non-disclosure because more often than not, people can explain where that undeclared asset came from, the source of that undisclosed asset. Because we've read the definition, right? So if we can explain the source, then it's not necessarily that it will be considered black money. But yes, you will still trigger the penalty, and the penalty will be for non-disclosure. Not disclosing is not scheduled. Yeah. But the best interplay, is between Black Money Act and Income Tax Act. Because they pretty much operate in the same domain, right? If you actually read the Black Money Act, it keeps redirecting you to the Income Tax Act from time to time. This section, like for assessee, assessment year, all these definitions are shared. It also states the most important thing. If there is an asset that has been taxed under the Income Tax Act, it cannot be assessed under the Black Money Act and vice versa. They technically exist separately. There is no overlap. There is no double taxation that is contemplated. Which means there is no interplay again. Because if one act is attracted to a specific thing, the other one will not be. Because the purpose is same. Taxation of an asset. Now, actually taxation of income. In the case of Black Money Act, asset also, right? Should we go back to PMLA? Or do we want to spend more time on black money? PMLA. This scaring tactics of lawyers always works, huh? Can we go back to PMLA, please? Yes. No, just no. Now for good news. PMLA does not have only criminal proceedings, it also has civil proceedings in the form of attachment and ultimate confiscation. This goes through various levels of appeal. First of them is the adjudicating authority. Once the officer makes a provisional attachment under section 5(1), he has to send a complaint to the adjudicating authority that actually adjudicates whether the provisional attachment should be confirmed or not. The appeal from there goes to the PMLA Appellate Tribunal, which is in Delhi. From there, the appeal comes back to a jurisdictional high court, and from there, the appeal goes to Supreme Court. Authorized representative is under PMLA redirects you to the Income Tax Act, which means what? CS can, right? Well, at least they can't say that Income Tax Act was not mentioned in the PMLA. But typically when you talk about proceeds of crime, there are a few judgments that we want to share with you all, which actually have things to do with chartered accountants. I mean, you look at it the way you want to, you look at it as something that comforts you or not. But the positive that I take away from it is that there is a certain level of protection built in as long as you have taken due care. When in doubt, qualify. Can we go through the judgments, please? All of them, one by one. No, this one not required right now. 19/3/2025, the PMLA Appellate Tribunal confirmed and upheld the attachment of properties of a chartered accountant on the ground that he had in possession proceeds of crime. Tribunal observed, we fail to understand that how a chartered accountant can be so negligent to issue project progress report and project completion report by relying upon the documents tendered by the party who is taking a huge loan from the bank. Just because of negligence of the respondent, the TAL group of companies were able to commit the fraud on so-and-so bank. The said conduct on the bank of the part of the respondent cannot be termed as an act done in good faith, but either in blind faith or inclusion with the accused persons. By committing professional negligence, he cannot take plea that the said attached amount was in fact his professional fees. The ED, by taking a lenient view towards the respondent, attaches account only for the amount of professional fees held in so-and-so. The adjudicating authority failed to confirm this particular account on pretext of professional fees without looking into professional negligence on part of the respondent, which resulted in the bank fraud. When in doubt, moral lesson given at the start, coming back. Please. Vinod Kumar Gupta versus Joint Director, DE, said all professionals such as advocates, solicitors, consultants, chartered accountants, I've put it in italics so that you all feel better about it. Doctors, surgeons receive their professional charges from their respective clients against service provided. Neither can the presumption under section 5(1)(a) can be drawn ipso facto that they have proceeds of crime received as professional charges in their profession, nor on the basis of presumption can their movable and immovable properties be attached unless there is a link and nexus directly or indirectly towards the accused or the crime is established within the meaning of 2(1)(u) of the Act. In the absence of such a link, the professionals are to be treated as innocent persons, and unless link and nexus of proceeds of crime is established under section 2(1)(u), proceedings under the Act cannot be initiated. See, this is the balancing act. Next one. We'll go through all three, then discuss, right? Madras High Court, when for issuing certain certificates, a chartered accountant is not required to go into the genuineness or otherwise of documents submitted by his clients, he cannot be prosecuted for granting the certificate based on documents furnished by the clients. The court observed that this could be compared with the legal opinion that are normally given by panel lawyers of banks after scrutinizing title documents without going into their genuinity. A panel advocate who has no means to go into genuinity of title deeds and who gives an opinion based on such title deeds cannot be prosecuted along with principal offender. Now here is the thing. There's a specific reason why I did not necessarily speak about certificates, but I kept speaking about audit. What we focused on for the last 1 hour is audit, right? In an audit, I am required to go on a fact-finding mission, right? I cannot take just what the client says as face value and say, just because these documents are given, these documents are genuine. Am I right? That again changes the nature of the protection a bit. These three judgments are, according to me, a triangle, right? Neither of them is bad. I do not think one of them is wrong. I do not think one of them is right. But it should superimpose on you all today the importance of being diligent. If negligence, because the word negligence was specifically used in the first judgment, right? If negligence can be shown, what happens? If your audit file is not complete, if you haven't gone into it in depth enough. So I attempted to give CA a very long time back, like around 15 years back. Clearly I'm not a CA or I'd be sitting there with you all. But at that time, they used to ask this very curious question, and it used to make my friends and me laugh a lot. Like, because I'm like, kya pooch rahe? And the question always came in the audit paper. Does anyone hazard a guess? Is the auditor a watchdog or a bloodhound? Does anyone remember this question? It can't be only me, right? This was standard. This was Audit 101. Is the auditor a watchdog or a bloodhound? I'm not here to give answers. I charge fees for the same. But I can throw questions. I am going to prescribe that medicine that I told you all about. Please be careful. Please be diligent. This is not something that is just going to, affect your next year's assignments. A lot of diversion of funds can happen in ways that do not necessarily hit you as a red flag. Like, it's not necessarily compulsory that a promoter may divert the fund into another account or try to siphon it off. But he could use a loan taken for a particular purpose and utilize it for his or her business only for another particular purpose, which is still not allowed, right? Diligent follow-up, diligent inquiry is required. The most important part is we cannot be seen as negligent. When in doubt, qualify. Because if you all think that PMLA is the only thing, please let's not forget. There are your local police or EOW with whom the scheduled offense vests. Okay? There is obviously the ED, there is SFIO, then there is, I'm sure there are other agencies also. Institute Western, we are there, ground floor. We third floor पे जाना पड़ता है ना वो disciplinary committee के सामने. I forgot the floor. I have appeared. I just forgot. No, not in personal capacity. I'm not a chartered accountant, but I have appeared. But it's required, and that also should, sort of put things in new perspective. Because this is not just about PMLA. This is about the other agencies also. And we have like a couple of minutes more. So let me be very quick and may I go off topic? Yeah. So we are not only talking about PMLA out here with respect to chartered accountants. We are talking about your balance sheets being a part of, balance sheets signed by you, going into specific, going before the NCLT. In case of oppression of mismanagement, it could go into those forums when it comes to IBC. It could go into so many places now. There are so many specific laws that have come out, so many legislations that have come out, that may have come out, so many years after you've qualified that probably you've not been able to keep track. It is a distinct possibility because most of y'all didn't know what I showed you today, right? It is a very distinct possibility. So whenever you have to decide between reporting and not reporting, qualifying and not qualifying, or refusing a certificate, please do the right thing by you. Because it is not just PMLA that is out to get it. It is what is required for the betterment of the financial system itself. But, I have to get back on portion also, and we have to wind up. Yes, please. Can someone just hand this over? I can't hear. Sorry. Thank you.
I say Rawat Badra has purchased land 7.5 crore and sold 58 crore to DLF. Whether it amounts to the PMLA or what? Because he has exercised influence by Congress.
Two things. Firstly, that is under investigation. Whether it is or not is what ED gets to investigate and what their defense is going to put up. Unless you're bringing me their brief, then of course we'll sit in office and discuss this further. I'm open to answering that question if you get me all the documents and the brief. But I'm sorry, just on the basis of something that comes in a newspaper, I do not think it is fair for me to comment on both sides. I hope you understand, sir. If you want to just have chai and gupshup, we can do that later. I do not know. If I do not know, I cannot comment, sir. It would be very irresponsible for me to do exactly the opposite of what I've been entreating you all to do for the last 1 hour, right? Yeah. Yes, please.
Say in case if any time the ED has summoned any person and the proceedings take off, then what is the probability that the case may actually end up into confiscation or something like that, and how much is the time gap which happens?
So the trial itself takes a significantly longer time, but there are strict timelines under the PMLA, at least when it comes to filing of the complaint, the adjudicating authority, and then the appellate tribunal is also fairly this thing is not. So your confirmation of the attachment may happen quite quickly. It also depends upon at what point of time the concerned officer has decided to provisionally attach your properties or carried out a search and decide to retain them.
One more thing here. Now when the ED summons anybody and the client comes to us, then he is always playing that I'm innocent, I'm innocent.
Of course.
So just wanted to know this. How is the intelligence with the ED? I mean, it is that 100% proof, or they are actually, throwing the ball so that we can just catch it?
I'll tell you what. Firstly, the basic principle in any criminal law is innocent until proven guilty. The case has to be proved beyond reasonable doubt. But there are some inherent presumptions that have been put in the statute, like under the PMLA, like under section 68 in income tax, as we have, source of source needs to be proved, otherwise this can be presumed, right? So there is a presumption that shifts the burden of proof of certain facts onto the accused under the PMLA. Like there is a presumption that proceeds of crime that may be considered for attachment are actually proceeds of crime connected to such crime. These presumptions are inbuilt into what, section 24? 22, and there must be one more also. Yeah, 22 and 23. So there is presumption as to records and properties in certain cases. There is presumption in interconnected transaction. And 24 is with burden of proof. It says in any proceedings relating to proceeds of crime, in a case of a person charged with the offense of money laundering under section 3, the authority or court shall, authority is obviously for the confiscation, and the court is obviously the special court that tries these offenses. Unless the contrary is proved, presume that such proceeds of crime are involved in money laundering.
So here it's already guilty unless you prove it that you are not guilty.
No. My interpretation is different. Sorry.
Because I heard somebody, a very well-known speaker, in this particular act specifically, he was very clear stating, in all other acts you leave it. Only when you are found guilty, then only when it is proven against you, then you are found guilty. But in PMLA, you will be termed as guilty unless you prove it otherwise.
Unless you rebut the presumption.
So initially, they will always take it off on you as if you are a guilty person.
Yes, you have to prove. A police officer or a ED officer is not supposed to initiate any proceedings against you unless they, in the case of police, suspect, or in the case of the ED, have reasons to believe that you are actually guilty. So remember how we had, I'm sorry, I don't know how this didn't come up till now. Reasons to believe is like my favorite subject because as a tax lawyer, I fed my stomach based on 148 erstwhile, which had reasons to believe before it became information. Today it's in PMLA. So you need reasons to believe that that person is guilty. The difficulty in PMLA, the reason why PMLA has become so, visible is because it's very difficult to get bail. The difficulty in getting bail is because the arresting officer needs to have a reason to believe, recorded, that you are guilty. Again, I don't have the papers. I've also been told they'll go on YouTube. Don't put me in that position. If I get papers, I can answer. If I am telling you all, please, when in doubt, qualify, I also have to qualify, right? No. Sir, what really happens is, you and I discuss what we see in newspaper reports on certain judgments. We do not know what is on the file of the investigating agency. I'm not even saying bias. What happens is that typically those charge sheets run into thousands of pages. A lot of statements are actually recorded. You and I don't have access to it. We get one paragraph, maybe on a first page or the second page of the paper. And I cannot make an informed decision based on that. Right, sir? That's it. Yes, sir.
Yeah, so we chartered accountants have been made as reporting entities.
Yes.
So in case if we don't qualify and subsequently if we report it to the FIU, as you said, that you can go to the portal on the FinNet and all.
No, they're different. They're completely different.
So just let me complete. So does that give immunity to a chartered accountant?
No. There is no immunity to anybody. That's why I said they're different. What happens is when you don't qualify an audit report, then you don't qualify that audit report. You have done something that you should have done. You have not done something, that you should have done. But when it comes to not reporting, there are very specific instances that you need to report. Say cash transactions, high value cash transactions, or certain suspicious transactions. Suspicious transactions are defined. I'm not going into all of them. The rules are there. You'll be able to see them, right? Suspicious transactions that you're needed to report. You have not done it. The reporting requirement is not for everything. You get what I'm saying, right? So the fact that you did not qualify doesn't have anything to do with the reporting. But one thing can be there, if you've actually reported a suspicious transaction, that tomorrow can be, if that forms a part of the transaction in money laundering, if you have actually reported it yourself, then at least that part of knowingly assist is something that it may help in rebutting.
Correct.
But no immunity.
So I got it, but at least maybe...
Of course. When they actually look at section 3, the most important thing was not proceeds of crime in the definition. It was actually knowingly, mens rea as lawyers call it, right? The intention behind everything. So your case for defense under any criminal law has to be, I did not have mens rea. So if you have actually reported these transactions, if you have qualified, after that if something happens, after more than your standard of due care or at least as required, if you have complied with everything, right, at least they cannot say you had intention. Right, sir? we are done or you want, we've got 5? I'm asking. You all tell me when to stop. PMLA is just like I can wake up at 3 a.m. in the morning and
Going back to black money, you had touched upon that beneficial.
I'm sorry, yes, thank
beneficial
you, sorry.
ownership. So
The
when
backbenchers is very bad lighting, huh? I have to tell the institute. Sorry.
Yeah. So I was asking that if a minor is having a beneficial ownership in one of the assets, will the parent disclose it, foreign asset, if I'm talking about?
See, if you are if the minor has a beneficial interest, the parent anyways will be the co-holder, right? Are you talking about a minor having a beneficial interest with nothing to do with the parent?
So
it all depends upon whether the minor has to file a return of income or not.
So if I talk about a trust which is established in, say, the US,
Yes.
and minor is having, minor is one of the beneficiaries and parent is not. Settler is somebody else. So how will the minor report it? As in, it is nothing to do with parent as such. It is
Correct.
made only for marriage and studies and everything of minor.
I will honestly have to get back to you on this, but because there would be something specific in it. But according to me, if it is a foreign trust that you're talking about, the assessing officer will want you to disclose, even if the act doesn't want you to. Sorry, one by one, please. Yes, so you said that many people are not aware of. It is a very common problem, especially for those people whose parents are actually abroad for a lot of time and they return to India and become residents much later, right? Because their father or their mother or their grandfather, grandmother may have put in, some things around 20, 30 years back, long-term investments that may mature that they had no idea they were beneficiaries in. We've had a lot of queries coming out here. We've also looked at it, like pension funds of your parents, etc. I mean, these are things that will get sorted out slowly. But that's a very interesting question. I will look to it. Clubbing provision may apply, but I don't want to comment without reading.
So clubbing will apply when there is income. It is just a disclosure.
No, ma'am had said that clubbing will apply, so I said it may apply, but I do not want to commit to an answer without having that specific, this thing done. But thank you for that question.
Okay, thanks. One more thing, this beneficial ownership or beneficiary interest is only for individual and HUF, what we see in 139. Now, if I'm a company, I'm having a step-down subsidiaries, foreign 1, foreign 2, etc., etc. Until what level I have to disclose?
See, usually that sort of query has come to me, all right, because typically it gets even more complicated because it may be that the director of the holding company may be a authorized signatory for operating one of the bank accounts of a step-down subsidiary, but very honestly, according to me, it's fairly grey. Even as of today, it is fairly grey. With respect to whatever you have to disclose, because now your income tax return is automated. In the good old days, when you were filing physical returns, you could disclose stuff as you saw fit. But now pretty much the department tells you what they want you to disclose, what they don't want you to disclose, how they want you to disclose, and they fill in the amounts also for you, right? I mean, I haven't filed it. So, a lot of it, there could be some sort of question on whether the automated ITR would actually, take the place of what the statute say, because the statute obviously does not go that much into the depth of it, right? There are more general provisions. But with respect to how many subsidiaries down, honestly, beneficial interest, if I am basically talking about my subsidiary, it is something that will be disclosed in my balance sheet and my
so
anyways.
FCO 1 I am disclosing. Now FCO 1 holds FCO 2 and FCO 3. So
Beneficial interest is what you're talking about, right?
yes.
We'll go to the definition of beneficial interest, please. Yes, please. Do we have it? Otherwise, just we have the act, right? See, whenever I come to meet CAs, I need to carry acts. I'll just see it. It's right in the start, right? क्या हुआ? Yeah. So beneficial interest is not defined in section 2. No, I'm talking about here. In section 2 of Black Money Act, beneficial interest is not defined.
In Black Money.
Yeah. 139 May, you're saying it is defined. I don't have the Income Tax Act right now. Can we see the 139 definition, please? Does anyone else have the definition? We are opening it up here also. Did anyone carry the act today? Or is this something that we shall discuss outside by winding up, right? Just open 139 any which ways. So, coming back to the start, because we have to end. The first thing is the interplay. The interplay between, yes sir, sorry.
What will happen?
Pardon me?
Suppose I have a client. Suppose he didn't disclose me his foreign asset, and I didn't disclose in return. Then what will happen?
You didn't disclose in the return means he didn't disclose in the return, sir.
He didn't tell me
Correct.
that I have foreign asset.
So that doesn't matter. When they want, he will either be assessed under the Income Tax Act or the Black Money Act, whatever the officer feels fit, and they will tax his foreign income or asset at the rate prescribed under the Act, and there will be penalty for non-reporting.
Because in many cases, client didn't tell us ki I have foreign asset.
In many cases, clients don't even know that they have beneficial interests in foreign assets.
Even we asked them, still they didn't tell us ki
I agree, sir. I'm telling you, this is a problem that is across the board, because a lot of people, firstly, no one wants to disclose foreign assets, saying that I am a resident here, ye, wo, everything. When I don't have income from it, nothing's hitting my account there. A lot of them are secretive about it. But isn't that the entire purpose of the FA schedule?
And suppose suddenly in 1 of year I started disclosing foreign asset, then what will happen?
In the year it first comes to the attention of the assessing officer, he may decide to tax it. If you cannot show the source. It is an undisclosed foreign asset, and we've gone through the definition. If you can show where your source is.
Then how?
Pardon me? Yeah. The question is, his question was, what if I suddenly disclose in 1 year? Like, I have not disclosed because I have not taken advantage of the scheme that came in when the Black Money Act came in, right? And I start disclosing when I get to know. What usually will happen is the client will come to me in one assessment year, tell me, ye 3 cheeze hai. 2 saal baad, they tell you, ye 2 cheeze bhi hai. But those cheeze, when you actually open those documents, you realize that they are more than 10 years old. So technically, they should have been disclosed 2 years back. That is your question, right?
Yes.
Yeah. So, I hope that is satisfied,
yes.
right? We'll talk outside because they will get, I mean, I can see them, next speaker and all. It is filing of returns, ma'am. So I am a firm believer in the fact that when it comes to filing returns, unlike an audit, my job is to assist the client in disclosing their total income as required. If the client herself or himself is not going to give me the information, I don't think it is a part of my responsibility while preparing their return to investigate them. That is my opinion. I may be wrong. It is very different because the scope of an audit is very different. But if I am filing an income tax return, I will say this is there. Can you give me this. But if something is withheld from me, another point is I do not sign the return, right? In my capacity, I am not certifying the authenticity of the return. So when you say what due care can you as a professional take, your duty while filing the return is more towards your client than at society at large. Your responsibility, according to me, when you're auditing, is at society at large, because those documents are certified by you and can be used by someone else. Yes. I agree. But filing of return also, I do not know what.
Recently, in one judgment, Institute has found guilty of that chartered accountant. He has claimed reduction under section 54 instead of 54 Act.
Yes.
So Institute has gone to such an extent that it is better to issue the.
If assess is in Bombay, they will get they'll get relief in appeal.
No, income tax is different. Institute has found that chartered accountant guilty of just
Negligence. Is that?
No, it is not a negligence. He has claimed reduction under 54
Huh.
and it should have been in 54 Act.
Right.
So Institute has gone such an extent, so it is better to issue the bill holding conference rather than preparation or filing the return.
So completely out of the scope of my today's this thing, but I will agree with you. I'll also explain why I said that that person will get relief in appeal. I said that because Bombay High Court judgment is there that says, because otherwise you would be bound by what is there in your return, whatever you file.
We have not found the relief from the institute.
No, because that entire return thing, of course.
Because barely claim writing 54 instead of 54 Act, you found the chartered accountant guilty. It is too much. Anyway, you can continue.
So I'm sure they've heard your grievance. Now, if I can just sum up.
They are also chartered accountants. They are
Yes.
knowing that all chartered accountant is not preparing the return. It is by their articles of staff they are preparing. So they should understand whenever you are sitting in the chair in front of you.
Sure, sir. I will quickly sum up. All right. Sorry, sir. I didn't want to interrupt, but I have a next speaker to hand you all over to. Right. Interplay between PMLA and income tax, nothing direct. 120B route has been cut out, but in the case of, typically speaking, income tax proceedings may not trigger it off, but if there is an investigation done by the IO or AO or by the DDIT, there is a good chance, like in the case of bogus purchase, overinflation, by GST, income tax, they have the right to file an FIR and then action can be taken, right? Though income tax evasion itself would not be a scheduled offense and trigger PMLA. Black Money Act, on the other hand, evasion will trigger PMLA because it is scheduled. Income tax and Black Money Act operate in the same field, where one is, the second isn't. A simple Bollywood example, it is not a double role, it is one person pretending to be two different brothers, right? So that is how Income Tax Act and Black Money Act are. They both operate in the same field. They both have a certain amount of overlap, but they don't. A certain degree of care has been taken to make sure that they don't overlap. And when it comes, which one else is left now? Black Money Act and PMLA we've discussed. Income tax and PMLA we've discussed. And yeah, I think that covers all of it. And of course, when in doubt, thank you so much.